Look, we are at an absolute make-or-break moment for Google, and it all comes down to what happens right now in February 2026. This isn't just about a stock price bouncing around on your screen. This is about the entire future of a tech titan.
So here's the billion-dollar question on every single investor's mind. Is this recent dip in Google stock a once-in-a-generation buying opportunity? Or is it a classic value trap? You know, the kind that signals the king is about to be dethroned. The answer is, well, it's not simple, and Wall Street is completely torn in half.
Get this, one top analyst over at Jefferies has a Google stock prediction of $400 a share, but another, from Evercore, puts it way down at $325. That is a massive disagreement. So I dug into every single new analyst report that came out after earnings, and what I found was the one number, the one catalyst that explains this entire divide and frankly decides everything for your portfolio. We are framing this whole situation as Google at a crossroads, and for good reason. Because the events of this month, right on the heels of their latest earnings report, are literally setting the stage for the next decade of tech.
The stakes really could not be higher. The AI revolution isn't some far-off thing. It's here, and it's happening now. And in this brutal winner-take-all war for dominance, Google either leverages its massive power to own the future, or it risks fading into irrelevance like so many tech giants of the past. There is just no middle ground here.
So let's just call this what it is, the Great AI War. We are talking about a knockdown, drag-out fight for a market that's projected to be worth over $5 trillion. This is a winner-take-all game, and the battle lines have been clearly drawn.
Now, what's so interesting about this slide is how it lays out the two armies. On one side, you have Team Google. They're armed with their brand new Gemini AI, the absolute fortress that is search, the cultural juggernaut of YouTube, Android's global reach, and the rapidly growing Google Cloud. And on the other side, you've got this powerful alliance of Microsoft and OpenAI, wielding ChatGPT, the massive Azure cloud, Copilot, and a surprisingly resurgent Bing.
And this right here, this is what so many people are getting completely wrong. They see Google spending these huge sums of money and they panic. They think it's a negative. But as this analyst quote suggests, that's a total misunderstanding of the tech arms race we are in right now. Let's unpack what's really happening behind the curtain.
All right, let's start with the bulls. Why are so many experts absolutely convinced that this Google stock prediction points to a massive upside, maybe even hitting that incredible $400 mark?
I mean, just look at the data. An incredible 90%, 90, of Wall Street analysts covering the stock rate it as either a buy or a strong buy. Only a tiny fraction are just sitting on the sidelines. That's not just optimism, folks. That's overwhelming conviction. But why? Okay, the bull case is built on a mountain of, frankly, jaw-dropping data. Google Cloud revenue just accelerated a 48% year-over-year growth. Its backlog of future deals, it didn't just grow, it more than doubled to a staggering $240 billion. They've already sold over 8 million paid enterprise seats for their Gemini AI. Their self-driving car unit, Waymo, just raised money at a $126 billion valuation, and the core business, Search, that revenue is actually accelerating at 17%, and they still own 89% of the market. This is an absolute fortress. And this is what leads firms like Jefferies to put out that headline-grabbing $400 price target. They see the current spending not as a risk, but as the concrete foundation for another decade of total dominance. But wait a second, hold on. If everything is so great, why on earth did the stock drop after that incredible earnings report? Let's flip the coin and look at the bear case and what the bulls might be dangerously ignoring. The bears, well, they're laser-focused on several key risks. First, competition. They argue that AI, like ChatGPT, is fundamentally changing how we look for information, and it's starting to chip away at Google's search dominance. They're pointing to a little softness in YouTube ad growth as a potential crack in the armor, and they are terrified about the massive spending on AI, fearing it's going to absolutely crush profit margins in the near term. You add in all the regulatory uncertainty from antitrust cases, and you've got a recipe for real concern. And this is the exact logic that leads a firm like Evercore ISI to a much more cautious Google stock prediction of $325. They see the same numbers, but they interpret all that spending and competition as major headwinds that could put a hard ceiling on the stock's potential. So, this brings us right to the core of the debate. You've got the bulls and the bears looking at the exact same company, but coming to wildly different conclusions. It all comes down to the one catalyst that truly matters. So who is right? Is it a generational buy or a total value trap? The answer isn't in the revenue, it's not in the profit. It's hidden in one single line item from that earnings call.
That's right. Despite blowing past all the top-line estimates, the stock sold off. And the reason? A single number that was so far above what anyone expected, it sent an absolute shockwave through the market.
Here it is, $185 billion. That is the high end of Google's planned capital expenditure for 2026. This is the money they're going to spend on data centers, on servers, on all the infrastructure they need to win the AI war. To put that in perspective, analysts were expecting a number closer to $115 billion. This is a monumental, staggering increase in spending.
And this one number brilliantly illustrates the entire debate. The bulls, like the analysts at Jefferies, see this as Google building an impenetrable defensive moat, the infrastructure that's going to secure another decade of growth. But the bears, they see this, and they see only one thing: massive, terrifying pressure on profit margins for the foreseeable future. Your entire Google stock prediction hinges on how you interpret this single number.
So what does this all mean for you and your portfolio? How should you be thinking about your own investment decision on Google right now? Here's a framework to help you decide.
All right, so how do you actually play this? There are really three ways you can look at it right now. If you're a bull, you're watching to see if that huge cloud backlog starts turning into real revenue. If it does, this dip is your buying signal, plain and simple. If you're more of a bear, you're looking for any crack in Google's armor. Is their search market share slipping, even a tiny bit? If you see that, it might be a sign to trim your position. And if you're on the fence, well, that's the third option. You can just play the waiting game. Hold your position and wait for the February dust to settle for more clarity from Google on how they plan to efficiently spend that massive pile of cash.
So let's boil this all down. The crucial takeaway is this: your decision on Google stock is really a bet on the outcome of the AI war. Bulls are betting on the undeniable growth in cloud and that all the spending is building a moat. Bears are betting that the cost of that moat is going to sink the ship. The entire story boils down to one question: does that $185 billion investment translate into even greater future profit? And this story is unfolding right now, this month.
So now I'm turning it over to you. Does Google win or lose the great AI war? Are you a bull or a bear? Drop your February price target in the comments below. I really want to see where our community stands on this critical Google stock prediction.
And hey, one last thing, make sure you subscribe, because Google's next announcement, whether it's on AI or their spending, could easily move the stock 20% in a single day. And when it happens, I'll be here to break it all down for you instantly. You are not going to want to miss it.